Welcome to Short View Trading. This is your morning market hit for Monday, 22nd of July. It's around 9 a.m. London time. What matters today and this week for markets? And in particular, if you're a trader of US equity futures with a 1 to 2 week time horizon, what should you be thinking about and focusing on? That's the purpose of this clip. Well, rotation remained the key theme in markets last week, out of large cap tech and into other parts of the market. You can see, for example, the Nasdaq 100 is down 6.4% from its peak earlier this month on July 11th, driven by key leadership stocks like Nvidia and other Mag 7 names. The rest of the US large cap index actually performed reasonably well. As you can see, the equally weighted S&P 500 made a new all-time high last Tuesday. So the major indices, the S&P, the Nasdaq, they're lower because of a small number of large tech companies, not because of general weakness in US indices. Having said that, small and mid caps have clearly taken up leadership in the past couple of weeks, with the Russell 2000 small cap index breaking decisively out of its pennant formation last week, albeit, as you can see on this chart, the index gave back some of its gains towards the end of last week. So where does that leave us? Is this new rotation theme in markets here to stay? And if so, do tech stocks keep working their way lower over the course of coming days and perhaps weeks? Or is tech about to find support and rally from key levels over coming days? Interestingly, Nvidia has been finding support at its 50-day moving average in the past 3 trading days. So the question is, has the key leadership stock of the tech sector started to build a base? Or should we be paying more attention to the Philly stocks, which, as you can see on this chart on Friday, broke down below the 53.70 level. That's its highs from May, its lows from June, and it's around its 50-day moving average. So what should we make of all of that, and how should we be trading this market in the near term? We answer all of that in our daily publication. In it, we make a 1 to 2 week trading recommendation, long or short, on US equity futures. It's available on the website to subscribers. We also offer a free trial. If you're interested, click on the link below, enter your name and email address, and we'll send you a free trial of our daily publication. What gives us an edge as we make these calls on markets? Well, it's indicators like this one you see on your screen now. This is our short-term technical scoring system for the Nasdaq 100, designed to pick the key turning points in the index on a 1 to 2 week time frame. It's generated timely signals in recent weeks, and as you can see, it was on sell about a week ago, and then as the market sold off, that sell signal unwound and the model is now back on strong buy for the first time since April. So is now the time to buy US tech stocks on a 1 to 2 week time frame, or should we wait for clear across the board buy signals? And as you can see on this chart on your screen now, downside put protection in Nasdaq stocks has started to build. In other words, panic is beginning to return to markets in the near term, but it's not yet back at April levels. So not every short-term model has yet moved back to its buy threshold. What are the signals we're getting from other short-term models? Have a look at today's daily publication for detail on all of that. What are we watching this week in terms of data, earnings and events? Well, on Wednesday, we've got manufacturing and service sector PMI data for a number of major economies, including the US. Thursday is the first estimate for Q2 GDP in the US. Friday is income and spending, personal income and spending, and the PCE inflation numbers for the US. And then in terms of earnings, Microsoft, Google, Tesla all report tomorrow. We've got Amazon coming out on Thursday, as well as lots of other earnings reports through the week. That was your morning market hit. Do follow us on YouTube, search under Short View Trading. Join us on Twitter, LinkedIn, Facebook. Thanks for listening.